All right, let's dive right in. Today, we're looking at a source that makes a really bold prediction that the next trillion-dollar industry is already here, kind of hiding in plain sight. It's all about tokenizing real-world assets. We're talking everything from skyscrapers to gold bars, and it could completely change how we think about owning, well, anything.
So, what's the headline here? What's the one big, audacious claim that's driving this whole conversation? Well, our source really doesn't pull any punches, and their prediction is exactly what we're going to unpack. And there it is. This is the next trillion-dollar industry. I mean, that is a huge, huge statement. And it's all about something called real-world asset tokens. So you got to ask, right? Where does all this confidence come from?
Well, to back it up, the author points to their track record. They're basically saying, hey, we called the rise of the gaming sector. We saw the AI boom coming, and we were on top of metaverse coins. The argument is that this isn't just some random crypto fad. It's the next logical step in this massive digital shift we're all a part of. Okay, so let's get down to brass tacks. What in the world are these real-world assets, or RWAs, that are supposedly going to be worth trillions? Let's break it down. At its core, it's pretty straightforward. Think about tangible, physical stuff you could actually touch, like a building or a bar of gold. An RWA is just that, but converted into a digital token on a blockchain. You can almost think of it like creating a digital twin for a real-world thing. And the scale here is just massive. We're not talking about some niche collectibles. We're talking about huge markets, real estate, commodities like oil and gold, fine art, even things like stocks and government bonds. I mean, these are literally some of the biggest financial markets on the planet. So here's the kicker, according to our source. You've got this colossal, multi-trillion-dollar market of physical stuff, and it's barely even touched the world of DeFi, decentralized finance. That gap between the old world and the new world, that's where they see this massive, absolutely untapped opportunity. But this all leads to a really important question, right? Why even do this? What's the point of turning a building or a painting into a bunch of digital tokens? I mean, what problem is this actually solving? Let's use a really simple example from the source to make this click. Picture a big office building downtown. Normally, you can't just buy a piece of it, right? But with tokenization, you could convert the ownership of that entire building into, I don't know, say 10,000 digital tokens. And just like that, anyone can instantly buy and sell tiny little shares of that building, just like you'd trade a stock. And the before and after here is just night and day. Think about selling a house. It's slow, it's plunky, it's expensive. You've got lawyers, brokers, bankers all taking a cut. But with tokenization, bam, you get instant trades 24/7 with way lower fees. It just blows the doors open for so many more people to get involved. Yeah, and this quote from the source just hits the nail on the head. It's about taking something that's traditionally really hard to sell, illiquid, like a famous painting, and making it as easy to trade as a share of Apple stock. That's a huge deal. Now, I know what some of you are probably thinking. Hold on, isn't this just another kind of NFT? And that is a fantastic question, but there's a really important difference, and our source is super clear about it. Okay, the key difference is actually pretty simple. RWAs represent physical things. A house, a gold bar. Their value is tied to that actual real-world object. NFTs, on the other hand, they represent unique digital things. A piece of digital art, a cool sword in a video game. So just remember, physical versus digital, that's the main thing. So this all sounds great in theory, but how does it actually work in the real world? Well, our source points to one specific project, Chainlink, as a really key piece of the puzzle here. Yep, the source specifically identifies Chainlink as a leader in this whole RWA space. So the big question is, what does it actually do? Okay, so think of Chainlink as a super secure data bridge, or what they call an oracle. Basically, it lets these digital programs on the blockchain, called smart contracts, get information from the outside world. It's like a trusted messenger that connects the digital world with the physical world. And the source gives a perfect example to help this make sense. Imagine you make a bet on an election using a smart contract. That contract is holding the money, right? But it can't exactly turn on the TV to see who won. That's where Chainlink steps in. It securely feeds the real, verified election results into the contract.
and then boom, the contract automatically pays the winnings to the right person. No arguments, no delays, it just works. And of course, this tech goes way beyond just betting. Our source points out its potential in all sorts of huge industries. We're talking healthcare, supply chain, aviation, and of course, finance. Basically, anywhere you need real-world info to reliably connect with a blockchain, this is a big deal.
Okay, so let's zoom out. What's the big takeaway here? After all that, what is the core idea that our source really wants you to remember? It really boils down to simple supply and demand. See, the whole Chainlink network runs on its token, which is called Link. So the author's logic is this. As more and more projects and businesses need to connect to real-world data, they're going to need to use Chainlink. And if they use Chainlink, the demand for that Link token is, in theory, going to go up. And all of this leads to a much, much bigger question, doesn't it? If we can turn almost any asset into a digital token, are we heading towards a future where all ownership is digital? I mean, could your house, your car, even your investments all just exist as tokens in a digital wallet? It's a pretty wild thought, and the implications are just massive.